So today was one of the days I don't really like in the market because my strategy does not work on this kind of day. And if you've watched any of my videos before, you know these days are the choppy days in the market, the days when the market basically makes its lowest point and its highest point in the day within like the first two or three candles, which is what I don't like. I want a break of the range so I can play it with the trend. But if the market didn't make a trend, I don't really have anything to play, which is why I need to either find another strategy for that or work on adjusting my strategy to play within those parameters. But let me show you basically what happened today. And today was kind of special. We had something called the Fed minutes, which is a detailed report of the Federal Reserve's last decisions, their last meeting. But they basically come out today, like 2 weeks later, and explain why they made certain decisions in more of a detailed report and kind of give you some foresight on what's going to happen. The only thing with today, they didn't really give much foresight, so the market was quite neutral after the release, which came out at 2 o'clock. But let me show you the trades I made today, the losses I took, because I took 3 losses today, including two to opposite directions, and then one was to play the news. I had got filled, it entered into my stop sell order, and then it came right back up and closed me out at my stop loss. So let me show you what happened. So my first trade was a buy, and if you've seen me use the platform before, you know the platform, because it's working on GMT time, this time seems a day behind, but it's really the correct time. And then the time that the trades are filled, you -5 from it and you get the exact time that I exit the trade or enter the trade. So this would be the 9:30 trade. So I definitely went in at market open right there to the buy side. And let me show you what happened. So to the buy side on the 9 o'clock candle, because it's an hourly time frame. Let me show you right here. Yeah, so this is the 9 o'clock candle, and I entered at 26663 to the buy side, 26663, and I'll see how that relates to the DXY, because that's generally why I would enter a trade like that. I'm not just frivolously entering a trade because I think it's going to go up. I'm using another macro indicator to kind of judge how I'm going to enter into the trade. So I entered at 26663, and let's see how it looked on the DXY. So on the DXY, I entered to the buy side on the QQQ. On the DXY, you have a huge red candle down, which is, oh wait, no, that's yesterday. So let's focus on today. My bad. So yeah, we had a red candle here on the DXY as well. The 9 o'clock candle on the DXY also had a red candle, which is why I believed it would have continued pushing down. If the DXY is negative, there is a higher possibility of the QQQ being positive. But that didn't happen today. I guess today might have been an outlier because people were positioning for the news. So that's where having like a news event can kind of mess up certain confluences if you're working with that. So I entered to the buy side 266, and I had my stop loss set, of course, for a max loss of what, 24.80 here. And was that, yeah, so it had something to do with this weekly level of support here, right? So I had a weekly level of support set, and then as you can see on the 10 o'clock candle, that's what hit me out. So I had it on the weekly just a slight bit lower than where the weekly is, in case it came down and just touched it. But unfortunately the 10 o'clock candle came, and as you can see, it was a huge wick down. So this would have cleared up a lot of people who had stop losses around these levels. I wouldn't expect someone to have a stop loss down here. and then to have a small risk to reward, that wouldn't really make a lot of sense. You would have like a 7 risk to the possible reward of probably 1, so you're risking what, 7, so 140 to make $20 in this case if you're going to the buy side. So that's where just a week like this can really take out a lot of traders during the day. But that was the first trade of the day. That was the loss to the buy side, and as you can see, it was from me looking at the DXY and believing it would have continued down. So the next trade was to the sell side, and as you can see, it kind of found a bottom here on the DXY, a huge engulfing green candle. So I believe, okay, we might have more sell pressure now because the dollar is going up. The dollar is more bullish now. If the dollar is bullish, there's a higher possibility of the QQQ being negative. But this was the only really negative part of the day when it came to the dollar. So this big green candle on the DXY related to this huge wick on the QQQ. So let me show you where I entered and exited on this trade. So I entered, same thing, on the 10 o'clock candle, and I closed it on the 10 o'clock candle, or I got hit out on my stop loss on the 10 o'clock candle. So let me show you. I entered at 262. Wow, 26266. So as you can see, I entered when we started to get really low, and I'm like, okay, the market really starting to push down. Let me just go with the trend, because I'm not fighting the trend. I'm just trying to ride it on the way down and collect some profit. So 26266. So right there is where I entered to the sell side for it to continue down, with my stop loss at 26437. So right above the weekly. So I was thinking, okay, you broke below the weekly level of support. I think you would have used it as resistance now and then kind of not play above it. However, it was a total whipsaw today, total whipsaw. But these things happen. It's just part of the market, and it's good to experience it and to know what it's like. So basically, I entered here to the sell side. I got hit out here when it hit my stop loss for a total loss of 1860 on that trade. And that was within, what's that, 33 minutes. I got hit out of the trade there. And then the third trade was when I went back to the sell side. So let me show you. I went back to the sell side, 26425. I can tell you exactly what was happening. So around this time, around the time that I set the trade, so I set a stop sell and a stop buy. So I set a stop buy above here, because usually with news like these, like where they come and talking about interest rates, you're going to see a big move either up or down. So I put my stop buy like directly above the daily resistance that I have drawn out here. So I use yellow for the daily key support or resistance levels, and I use purple for the weekly key support or resistance. So I had a stop sell, meaning that if the market began to go beneath this level, it would have immediately hit me in and I would have taken it more down. And I also had a stop buy, thinking that if the market hit this level, it would have continued up. So the market continued its trend and it was just a whipsaw. So I believe I got hit in on this candle, which was this one. Let me see, 2 o'clock. So this time you minus 5 from this, you get 1425, which is 225. And I entered at 26425. 26425, yeah, right? So I wanted the market to like decide if it's going down, you better hit under the weekly and be continuing down. So I entered at 26425. 26425. 26425 to the downside, and that didn't play out because, as you can see, the market really came right back up on the next candle, which is just a complete whipsaw. And these things happen. I mean, the market's gonna do what it wants. You're just participating and trying to make as much money as you can out of it. And today just was not one of those days. But it's good that I can actually review the trades that I placed and then try to improve from there. So I entered to the downside here, and I basically got hit out right around here at my stop loss. And that's okay, because I lost, let me see how much I lost on this trade. I lost $29 on that position. So basically, let's see how tomorrow plays out. I'm hoping we don't have that much of a whipsaw. Like, I want the market to pick a direction and go with it. So you can see the dollar kind of creating some red candles here in after hours, or I wouldn't say the dollar doesn't have after hours, the dollar just plays, but it kind of has a gap right here, which is interesting. Oh yeah, you have a big gap down. If the dollar continues to go down, that might be very bullish for the market. If you want to see like up to date timing on what's going on the market, you would have to look for an index that you could trade on a CFD or like on a forex platform, which would have been the Nasdaq 100, which is the same thing as the QQQ. The QQQ is just the ETF that you can trade on a brokerage platform, but if you want to trade it on like a forex platform like MetaTrader 4, you would go for Nasdaq 100, right? So basically that's it. So as it relates to the minutes, I wanted to look over some key takeaways from the minutes from Bloomberg and just to read them so we understand why the market reacted a certain way. So here are key takeaways from the minutes of the Federal Reserve's December 13-14 meeting release Wednesday, which is today. So a number of officials stressed that the decision to step down to a 50 basis point hike following 4 straight 75 basis point increases was not an indication of any weakening of the committee's resolve to achieve its price stability goal. So they're basically saying just because they went lower on the amount they're hiking, it doesn't mean that they're gonna start easing anytime soon. They can start easing, but they're basically emphasizing that just because they're not being so aggressive with the rate hikes doesn't mean that they're not focused on hitting like the price stability goal, reducing inflation by having higher and maintaining higher interest rates. So Fed warns financial markets not to underestimate the central bank's resolve to bring down inflation, as minutes cite policymakers saying an unwarranted easing in financial conditions, especially if driven by a misperception by the public of the committee's reaction function, would complicate the committee's effort to restore price stability. So basically they're saying they don't have any plans to cut rates anytime soon, and they want to really communicate that to the market and to all participants that the Fed is more focused on just hitting their goal of price stability versus trying to give the market the idea that it's going to be easing anytime soon. Because if the Fed eases, that's very bullish for the market. Even for the short term, it's bullish for the market. It might bring up inflation a bit, but it's bullish for stuff like equities. Okay, risk of higher inflation seen as a key factor shaping outlook for policy. Exactly. So minutes give little hint on whether the next rate hike is more likely to be 25 or 50 basis points, saying the FOMC would continue to make decisions meeting by meeting. So this is exactly why the market was very neutral today, because the Fed did not come out and say, oh, they're going to do this, they're going to do that. No, they're telling you, wait until the next meeting, wait until they see the next catalyst, and then they will make the decision. So the market has nothing to work on off of that. The market is just like floating. They don't know where policy is going to be in the next meeting by the Federal Reserve, so the market doesn't really have a direction, and it's gonna play off of its own catalyst, not really the what we say the economic environment or the tightness of the financial conditions. So staff economic outlook was less weak than in prior FOMC meeting. Staff sees the possibility of a recession as a plausible alternative to the baseline after previously viewing odds at close to 50-50. Okay, so that's basically it. So the Fed didn't give us much to hold on to today, you know. And I mean, that's what happens. We're going to see how the market takes it. I'm seeing the dollar kind of break lower. And this is exactly what I wanted to play on Tuesday. Just that gap fill, because as you can see here, the dollar made a huge push to the upside here. And as you can see, over the following days, it's just been slowly trickling down. So you have a little push down here, a little gap up. It makes a lower high. Now it starts to push down. And this is also a reason why I went bullish on the first trade of the morning, because the dollar is obviously kind of trending back to the downside. If the dollar is trending to the downside, that's usually bullish for the QQQ. But it didn't work out in my favor today. Let's see how tomorrow plays out, and we'll just tackle it from there. All in all, thank you if you watched the video, and I hope I'm providing you some form of value while I'm reviewing my trades and trying to improve on myself. And I'll see you in tomorrow's video. Bye bye.